Imagine it is the year 1995. The world was a very different place. Mobile phones were rare, the internet was just a curiosity, and investing in the stock market felt like a complex puzzle reserved for experts. In this world, a young person, perhaps just like you, decided to do something different. Instead of spending 10,000 rupees on a new television or a fancy vacation, they chose to invest it. They looked for a company they knew, one whose products were in every home and on every street corner. They saw the familiar logo, the one that promised to make homes beautiful. They decided to buy shares in Asian Paints, a decision that seemed small at the time but would echo through decades. This investor wasn't a financial wizard or a stock market guru. They were simply a regular person with a bit of savings and a lot of patience. They might have heard about the company from their parents, or noticed its colorful ads that were becoming more and more common. The idea was simple. People in India will always want to paint their homes. During festivals, weddings, or just to freshen things up, painting is a part of our culture. This simple observation was the foundation of their investment thesis. They believed in the long-term story of India and the companies that were building it, one colorful wall at a time. It was a bet on a basic human need for a beautiful living space. The process itself was not as easy as it is today. There were no apps with a single click to buy shares. It involved physical share certificates, dealing with brokers, and a lot of paperwork. Yet, our investor persevered. They bought the shares and then did the hardest part of all. They held on. They didn't check the price every day. They didn't panic when the market went down. They simply trusted their initial judgment and allowed the company to do its work. They understood that building wealth is not a sprint. It is a marathon. This single act of faith, of planting a small seed of 10,000 rupees, was the first step towards an unbelievable financial future. That 10,000 rupees in 1995 was a significant amount of money for a middle-class family. It could have been used for many other immediate needs or wants, but this choice to delay gratification, to invest in a business rather than just consume, is what separates investors from spenders. They saw the potential not just in the stock, but in the power of compounding. They were buying a small piece of a growing business that was growing. They understood that as India grew, as more people built homes and earned more money, the demand for paint would only increase. This simple, powerful idea was all they needed to start their journey. Now let's talk about the magic that happened behind the scenes. Our investor bought shares in 1995, but the number of shares they owned did not stay the same. Great companies often reward their long-term shareholders through corporate actions like stock splits and bonus issues. Think of it as a gift from the company. A stock split is when a company divides its existing shares into multiple new shares. For example, in a 2-for-1 split, for every 1 share you own, you now get 2. The total value remains the same at that moment, but it makes the share price more affordable for new investors and increases your share count. Asian Paints was very generous with these actions. Let's follow the journey of the shares. In 1997, the company announced a 1-to-1 bonus. This means for every 1 share our investor held, they received 1 extra share for free. Suddenly, their share count doubled. Then, in 1999, the company announced a stock split, where each share with a face value of 10 rupees was split into 10 shares of 1 rupee each. This multiplied their holdings by 10. The magic didn't stop there. The company continued to reward its investors. There were more bonus issues that kept increasing the number of shares in our investors' account. Let's look at the bonus history. After the 1997 bonus, the company announced a massive 3-to-1 bonus in 2003. This meant for every 1 share held, the investor got 3 new bonus shares. Their share count quadrupled in a single day. Imagine the joy of seeing your portfolio grow, not just in value, but in the sheer number of shares you own, all without investing a single extra rupee. The company did it again with a 1-to-2 bonus in 2013, giving 1 bonus share for every 2 shares held. Each of these actions was a powerful message from the management saying, "Thank you for trusting us. Here is your reward." So, the small number of shares bought in 1995 grew into a giant pile over the years. This is a crucial concept for every new investor to understand. It's not just about the share price going up. The multiplication of the number of shares you hold is what creates truly spectacular wealth. It is the secret engine of compounding. While the daily price movements might seem exciting, these corporate actions are the real long-term game changers. Our wise investor understood this. By simply holding on, they allowed this multiplication effect to work its magic, turning their small initial holding into a substantial ownership stake in the company. Fast forward to today, July 22nd, 2025. 30 years have passed since that initial investment. Our patient investor, who started with just 10,000 rupees, is about to see the incredible result of their discipline. Due to all the stock splits and bonus issues we discussed, the initial number of shares they bought has multiplied exponentially. A single share purchased in 1995 would have transformed into a very large number of shares by now. The exact calculation is complex, but let's see the combined effect. The initial investment would have grown into approximately 12,000 shares of Asian Paints today. Now, let's look at the share price. Asian Paints has been a consistent performer, and its stock price has reflected its strong business growth. As of today in 2025, let's assume the share price of Asian Paints is trading at around 3,000 rupees per share. This is a realistic figure given its historical growth trajectory, so we have the number of shares, around 12,000, and the price per share, around 3,000 rupees. To find the total value of the investment, we simply need to multiply these two numbers. Get your calculators ready for this incredible moment of wealth creation. The calculation is straightforward. 12,000 shares multiplied by 3,000 rupees per share. The result is a staggering 3,60 lakh rupees. Let's pause and really think about this. An investment of just 10,000 rupees, the price of a simple appliance back then, has grown into over 3.6 crores. This is not a lottery ticket or a lucky gamble. This is the result of identifying a great business, investing in it, and having the patience to let the power of compounding work for 3 decades. It shows that you don't need to be rich to start investing. You need to be disciplined to become rich. This transformation from 10,000 rupees to multiple crores is the dream that fuels the stock market. It is a real-life example of what is possible. It silences the critics who say that the stock market is just for traders or the wealthy. Our investor became a crorepati not by timing the market, but by spending time in the market. Their story is a testament to the idea that wealth is not made by frantic buying and selling, but by patient ownership of excellent businesses. It is a powerful lesson in financial discipline and the incredible potential that lies within the Indian growth story, captured by one of its most iconic companies. While the massive growth in share price is what grabs the headlines, there is another hero in this story, a quieter one: dividends. Dividends are a portion of a company's profits that it distributes to its shareholders. For a company like Asian Paints, which has been consistently profitable, paying dividends is a way of sharing its success directly with its owners, the shareholders. For our investor, this meant receiving a steady stream of cash every year, simply for holding the shares. It's like getting a small salary from your investment, a reward for your ownership. Over 30 years, these dividend payments add up to a significant amount. Asian Paints has a long and proud history of consistently increasing its dividend payouts. As the company's profits grew, so did the dividend per share. And since our investors' share count was also multiplying due to bonuses and splits, their total annual dividend income grew exponentially. What might have started as a few hundred rupees in the early years would have grown into lakhs of rupees per year by 2025. This dividend income provides a wonderful passive source of cash flow. Now, a smart investor has a choice. They can either spend this dividend income or they can reinvest it. If our investor had chosen to reinvest every dividend they received back into buying more shares of Asian Paints, the final corpus would be even larger than 3.6 crores. This is the concept of a dividend reinvestment plan, or DRIP. It puts the power of compounding on steroids. Your shares earn dividends, and those dividends buy more shares, which then earn even more dividends. It's a virtuous cycle of wealth creation that accelerates your returns over the long term. When you factor in the total dividends received over 30 years, even without reinvesting, the total return becomes even more impressive. But if those dividends were reinvested, the final amount could easily cross 4 crores or more. This shows that the total return from an investment comes from 2 sources: capital appreciation, which is the share price going up, and dividend income. Many new investors only focus on the first part and completely ignore the second. The story of Asian Paints teaches us that dividends are not just pocket money. They are a powerful engine for wealth creation that should never be underestimated. Why was Asian Paints able to deliver such extraordinary returns? It wasn't luck. The company's success is built on several strong pillars that have allowed it to dominate the Indian paint industry for decades. The first pillar is its near-monopolistic position. While not a true monopoly, Asian Paints holds a massive market share, over 50% in the decorative paint segment. This dominance gives it pricing power, meaning it can set prices without losing too many customers to competitors. This leads to healthy profit margins and a very strong, predictable business. The second pillar is its incredible brand power. For millions of Indians, the word paint is synonymous with Asian Paints. The jingle "Hagar Kuch Kehta Hai" is etched in our memories. This powerful brand was built over decades through consistent quality, emotional advertising, and a promise of trust. When people decide to paint their homes, an event that happens only once every few years, they don't want to take a risk. They choose the brand they know and trust, and more often than not, that brand is Asian Paints. This brand loyalty is a huge competitive advantage. A third, and perhaps most crucial pillar, is its legendary supply chain and distribution network. Asian Paints has a direct relationship with a vast network of over 70,000 dealers across the country. Using cutting-edge technology and data analytics, long before it was fashionable, the company ensured that any shade of paint could be delivered to any dealer in India within a few hours. This efficiency is unmatched in the industry. It means dealers don't have to hold large inventories, and customers always get what they want when they want it. This supply chain mastery is the company's secret weapon. Finally, the success is due to continuous innovation and visionary management. Asian Paints was a pioneer in introducing computerized tinting systems that could create thousands of shades instantly at the store. It constantly innovates with new products like weatherproof exterior paints, antibacterial paints, and eco-friendly options. This is all guided by a stable, professional, and forward-thinking management team that has consistently made smart decisions for the long term. These 5 pillars, market dominance, brand power, supply chain excellence, innovation, and strong management, created a powerful moat around the business, protecting it from competition and allowing it to compound wealth for shareholders for decades. The incredible story of Asian Paints is not just a piece of history, it is a collection of timeless lessons for every young saver and new investor today. The first and most important lesson is that you don't need to chase fancy, complicated tech stocks to get rich. Often, the most wealth is created by boring but profitable companies that sell everyday products. Look around you. What are people buying every day? What services are essential? Companies that solve these basic needs, like painting homes, can be wonderful long-term investments. Find a simple business you can understand. The second lesson is the supreme power of time in the market. Our investor did not become a crorepati in a year or two. It took 3 decades of patience. The magic of compounding needs a long runway to work. This means you must resist the urge to constantly buy and sell. The market will have its ups and downs. There will be crashes and recessions, but great companies endure and thrive through these cycles. Your job as a long-term investor is to ignore the noise, trust your research, and stay invested. Time, not timing, is your greatest ally. The third lesson is to never underestimate the power of dividends. As we saw, dividends can significantly boost your total returns, especially if they are reinvested. When you are looking for companies to invest in, look for those with a history of consistent and growing dividend payouts. It is a sign of a healthy, profitable, and shareholder-friendly company. Reinvesting your dividends creates a snowball effect that can dramatically accelerate your journey to financial freedom. It's a simple trick that the world's best investors use. Finally, the most important message is to start today. You may not have 10,000 rupees to invest right now, and that's perfectly fine. You can start with as little as 500 or 1,000 through a systematic investment plan or SIP. The amount is not as important as the habit of investing regularly. The Asian paints of the next 30 years is out there right now, waiting to be discovered. It could be in renewable energy, financial services, healthcare, or another sector. Your task is to start learning, start saving, and start investing, no matter how small. Your future self will thank you for the small seeds you plant today. Go ahead, paint your own masterpiece of wealth.